Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you about the composite supplies and mixed supplies. What are the differences? Then next one regarding the recording of transaction of purchases from unregistered dealers. That I have explained in the last video. So in this video I'm going to explain you about the exports and what are the types, various types of exports, and what is the procedure of recording export sale or export supply in Tally ERP 9. This is the topic in this video I am going to cover up, so watch the video till the end to get the complete command. Very frequently in examination this question was asked, like what do you mean by exports under GST? What are the types of exports and what is the procedure of recording export transaction in Tally ERP 9? So before starting the explanation of this topic, take a screenshot of the points which I have written on the board, then I'll explain all the points in detail. Now, we'll start our discussion now. First of all, exports. Exports can be defined as the supply of goods outside the country. When the goods are supplied to outside the country, that means the recipient is located in another country. That means goods are supplied to recipient outside the country. Example, India. From India, we are supplying the goods to US. That means the recipient of the goods is in US and the supplier is in India. Then the goods supplied from India to US is called export. In this transaction, the location of the supplier is in one country and the location of recipient of goods or services will be in another country. So when the supplier and the recipient are located in two different countries, then the goods supplied or services provided will be treated as exports. Now, types of exports. Broadly, according to GST, the exports are divided into four types. One by one we'll discuss. The first one is exempt export. Exempt export, it refers to those export transactions which are exempted from tax liability. The GST has specified some exports as exempt exports, meaning there is no tax liability on these goods exported. So, no tax liability under GST for exempted exports. The applicability of tax liability is none. Then second one is taxable exports. So, majority of exports are taxable exports. It refers to those export transactions which are taxable under GST. Under GST Act, the exports are taxable. So that's why it is called taxable exports. Now, tax applicability will be integrated tax. You have to remember, on exports, the tax applied is integrated tax, not SGST or CGST, but integrated tax, IGST. Exempt exports, third one. Exempt exports under LUT or bond. LUT stands for letter of undertaking. So if any export transaction is conducted under letter of undertaking or bond, then what will happen? Whether tax is applied or not. Now we'll see. It refers to those exports through LUT, letter of undertaking or bond, which are applicable only when accompanied by a letter of undertaking with the export department without the payment of duty. The export department will issue the LUT. So if any exports are made which is accompanied by LUT, which is given by export department, no duty will be applied, no tax will be applied under GST. So tax applicability will be none. if the exports are under LUT or bond. Now last one is deemed export. Deemed means just like, not exactly export, but just like export. Deemed export. What is the provision? Deemed exports are those exports in which the payment is received in the country while the goods which are supplied do not leave the country. That means normally exports means the goods which are supplied from one country to another country. But there are some cases where the goods will not leave the country. Exportable goods are there, but these exportable goods are not leaving the country, within the country itself. For example, the goods are sold to ABC company. ABC company is the main exporter. Our company is XYZ company. Now XYZ company is not exporting the goods. XYZ company is selling or supplying the goods to ABC company. Now ABC company is exporting the goods outside India. So whatever goods we are supplying to ABC company are called deemed export, not actual export. We are supplying the goods to ABC and ABC is supplying the goods outside the country. So country, while the goods which are supplied do not leave the country. The goods are manufactured and supplied within the country. Goods are produced and supplied within the country. The supply of goods is at the end exporters. That means the goods which are manufactured and transferred, supplied within the country is to another party, and that party is the main exporter. That is called deemed export. So what I have explained so far, the meaning of the term exports and what are the types of exports. 4 types. First one, exempted exports, taxable exports, exports under LUT or bond. Last one, deemed exports. Now, accounting of taxable exports with an example. In examination, a question will be asked. Explain the procedure of recording the transaction of export supply. So with the help of example, I am going to explain you how the transaction will be entered in Tally ERP 9. Some exports are taxable and they attract integrated tax. Just now I told you in this taxable exports, integrated tax will apply IGST. So the following is the illustration of how taxable exports are recorded in Tally ERP 9. One example I have taken and I will show you what are the steps to be applied to record the taxable exports in Tally ERP 9. First of all, date particulars. Suppose the date is 7th July 2017 and the voucher is sales voucher. Then Chirag Traders exported the following taxable goods to Akash Traders, Kenya, and the charged integrated tax. Suppose our company is Chirag Traders and we are supplying the goods to Akash Traders in Kenya. So our business is in India. We are the exporters and the recipient party is Akash Traders staying in Kenya, and we have to pay integrated tax. And what are the items we are supplying? We are supplying printers, 3 quantity 3 and rate is 7,000. 3 into 7,000, 21,000 is the amount. This is the transaction. Now how this transaction will be entered in Tally ERP 9? That's what I am going to explain. To record the taxable exports in Tally ERP 9, follow the steps given below. 2 steps I am going to explain you. The first step, create the following ledgers. Creation of accounting masters. Before entering any transaction, we must have the accounts opened. Without opening the accounts, directly we cannot enter in any transaction. So before entering the export transaction, open the accounts. Open the accounts. Which account? Ledger account Akash Trader. This is the buyer or recipient. So Akash Trader details under sundry debtors. So under the group of sundry debtors, we are opening the ledger account of Akash Traders, and the country we will give Kenya. Then integrated tax. This integrated tax account we have to open. Where we have to open? Under duties and taxes. So in Tally ERP 9, one option is there, duties and taxes. Under duties and taxes, select the type of duty. Type of duty we select integrated tax, and percentage of calculation we will take it as 0%. So this is the first step, creation of accounting masters. First one. Now second step, recording exported taxable, exports taxable. That means the exports which are taxable exports, how to enter into Tally ERP 9. Already we have opened the ledger. Now first go to gateway of Tally, then select accounting voucher, then press F8 for sales. F8 for sales. Now ensure sales voucher is an item invoice mode. You have to ensure, you have to be sure that the sales voucher is in the item invoice mode. Third one, click F2. The F2 function is there for changing the date, and change the date to 7th July 2017. Then enter the reference number as 2 by CT. Then select Akash Traders in the party account name field. It will ask you the party account name. There you select Akash Traders. Already we have opened the ledger account for Akash Traders under sundry debtors. So select Akash Trader as the party name. Next is accept the party details screen as it is. Already we have given the complete details of the party Akash Traders. Simply accept the party detail. Select export taxable in sales ledger field. In the sales ledger field, select the item taxable exports. Then in the name of the item field, select printer. Actually what we are exporting. So here in the name of item field, select the printers from the list of stock items. List of stock items will be displayed. Under the list of stock items, select the printer. That's it. Enter the quantity as 3 numbers. Because we have taken an example, 3 printers are supplied at the rate of 7,000 each. So here enter the quantity as 3 numbers and rate as 7,000. The amount will be calculated automatically. Press enter. Once you give the quantity and rate, automatically it will be multiplied. 3 into 7,000. Automatically it will take 21,000. Then press enter. Enable the option provide GST details to yes. It will ask you whether GST details are required or not. So yes or no. So click yes. And to enter the additional details like shipping number and date, then select integrated tax ledger. Once you have filled up the data of the party, what are the items you are selling, what is the rate, what is the amount, all these things you have filled up. Now you have to fill up the next is integrated tax ledger. The tax amount will get captured automatically because already we have fixed the rate of tax, rate of GST. So automatically integrated tax will be calculated. Then press Alt plus A to view tax analysis screen. Press Alt plus F1 to view in detailed mode. So if you want to view the report, if you want to view the tax analysis, so press Alt plus A, you will get a short analysis. If you want a detailed analysis, press Alt plus F1. Then press Escape from the tax analysis screen. You have seen the tax analysis screen, now you have to go back. So escape from the tax to go to the sales voucher creation screen. So we have completed. So again we are going to sales voucher screen. Then in the bill-wise details for Akash Trader sub-screen, select new reference as the type of reference and enter the name as 2 by CT. Then enter the narration if required. It is optional. You can give the narration or you can skip. Then press enter to accept. Finished. Now simply press enter to accept. This is an outward supply. because we are the supplier. It's an outward supply. So hence it can be viewed in GSTR1. So GST report 1. In this GSTR1, we can view the complete report. We can view the complete report because it is an outward supply. To view GSTR1, what is the path? Go to Gateway of Tally, then select Display, select the statutory report, select the GST, and lastly select the GSTR1. The transaction will be listed under Export Invoices. Your complete transaction will be displayed. You can get the complete report regarding this export invoice. So these are the steps to be followed for entering a transaction of export supply, which is taxable export supply. So what I have explained in this video is what are exports, what are the different types of export, and how to enter the taxable export transaction in Tally ERP 9. Inshallah, the next topic we will continue in the next video.